Welcome to Legal Innovation Spotlight, the podcast that brings you the latest advancements in legal tech and knowledge management. I'm Ted Theodoropoulos, and I connect with the industry's brightest minds to provide you with valuable insights and actionable takeaways. So sit back, relax, and let's dive in. Haley Altman, how are you this morning?
I'm good. How are you, Ted?
I'm doing great. I appreciate you joining me for a few minutes for what I think is going to be a very interesting conversation. Before we jump into the combo, actually, how we got connected, I think we were on a panel.
Yes.
And we were riffing on M&A, and I think you and I kind of have the same perspective on where we are with things. But before we jump into that, why don't we do an introduction? So you started, I think, you were a practicing attorney with Ice Miller, and then you were founder CEO at Doxley, got acquired by Latera, and you have a really interesting role now. So why don't you tell us a little bit about who you are, what you do, and where you do it?
Yeah, no, I was a M&A attorney. I also worked in Silicon Valley at Wilson Sonsini. So I got really excited about the tech space. You know, you can't help but be excited when you're in Silicon Valley working with all these amazing companies, kind of changing the landscape. I came back to the Midwest where I was from, moved up to partnership, and was just, trying to manage a lot of deals. I did, when you're in a full service law firm, I did venture capital, M&A, and some credit type deals. And so I was working a lot, came up with the idea for Doxley, kind of in the middle of the night, trying to track down a signature page. So after I made partner, just, realized, I really thought I had a perspective on how to solve a problem that was facing us. So partnered with the venture studio to launch Doxley and grew the business, raised capital, exited within 3 years, which is a pretty quick turn. And then moved up at Latera to run Corp Dev and help them lead them through 10 acquisitions in about 18 months, which was quite a run. And then took a little bit of a break, continued as an advisor to Latera. And then when Gen AI came out, was just excited about the possibility to solve problems that I had wanted to solve while I was leading Doxley and at Latera. And so partnered with the co-founder, Brett Balmer of Foundation, and we built some of Latera's new Gen AI products with the Latera team.
Interesting. So what did Doxley do exactly?
Yeah, so Doxley was transaction management. So when you have a deal, you typically have a checklist that was living in Word, and it'd be a list of all the documents that needed to be drafted, consents that needed to be obtained, everything you needed to do to complete this transaction. Because before money changes hands, you need to make sure everything's buttoned up. Every document is finalized, I's dotted, T's crossed, and all signature pages obtained. And so we are that platform that allowed people to see what were the final versions of agreements. We created all the signature pages. We packeted everything together. We basically brought, project management, workflow management to the transaction space. And so helped create this category that continues today of transaction management.
Interesting. And what year did you start Doxley?
In 2016.
Okay. So you exited 2019?
Yeah. Yep.
All right. That's an interesting time. Yeah, the timing, because things got crazy during the ZIRP era. And, especially in 2020, when the Fed started injecting trillions of dollars of liquidity into the economy, and all that capital had to find a home. And it really drove up valuations because there weren't really that many productive places. It almost forced investors to be speculative, highly speculative, and drove valuations up a lot.
Right. You started to see, even at seed rounds, even pre-product rounds, where people, there wasn't, it's like you've seen the ebb and flow of how capital moves, where for a while you were seeing a lot of money going in at early stages where you hadn't, products weren't really on the market, product market fit hadn't been proven. So you started seeing money go early. Then there was a time period where we actually saw it shrink back. Like those were really speculative. Okay, so now we're going to see higher expectations. But in that time frame, when there was so much capital and people needed to figure out what to do with it, we saw a return to high valuations in earlier rounds without some of that expectation of product market fit that some investors had become a little bit more used to in terms of deciding to deploy. Yeah.
Yeah, imagine that, like needing product market fit before you write a check. Like
Yeah.
that
Yeah.
seems like very fundamental requirement. Certainly would be for me to
Yeah.
write a check. But so you took a break in there. It sounds like on the corp dev. Is that when Peter from Clocktimizer was he in that role for a bit?
Yeah, so so Peter was on my team. So I was Clockmizer was one of the first acquisitions I did for Latera. And so then he was on my team, and then they had brought in a chief corp dev officer, Alan, who worked with, and he and Peter worked together on kind of continuing in that role. And then I maintained as a strategic advisor on that front as well, and on the product side a little bit more.
Gotcha. So tell me about the role you're in now, because it sounds really interesting. It sounds like you're almost like an entrepreneur here, where
Yeah.
you've been able to like create a startup within an existing company, which I imagine definitely has some benefits. I imagine there's probably downside too, like with everything, right? But like you've got the resources and the market power, and tell me about the role.
Yeah, so that was really, I give a lot of credit to Latera for really trying to think outside of the box when Gen AI came out. So we're a big company. We have a product set that it had established roadmaps that they had to pivot in order to think about where Gen AI fit into those core drafting and diligence workflows, an AI product in Kira, how does that need to pivot? So they needed to have a really strategic focus on how they were going to take a look at this new technology. And I think they made really smart decisions in bringing it in where it made sense and not trying to pivot entire product lines. Like, you need to deliver on the things you promise to customers and think through it. So while you're thinking through how to address all these big product lines, there's still opportunities to fill gaps. And a lot of times, in bigger companies, you fill gaps through acquisition. But, with Gen AI, there was so much going on all at once. You really needed to think about, how could I build something new? And so I had come to them with an idea that I had wanted to work on in the deal point extraction. When I had Doxly, one of the last things we did in the platform was we created a closing book, all the documents in the transaction, putting them all together, index, so everyone had the clear picture of that. But what I had wanted to do is take it one step further and say, okay, once you have that closing book, you have all the documents that show you what a transaction is. Now, could we take the data points out of those documents and leverage them? They're super critical, super important, and valuable in terms of winning the next deal, understanding what precedent looks like, what market looks like. And so I always had wanted to, kind of have a survey at the end of a deal so that you could start to collect these data points. But with Gen AI, we've thought, okay, wait, what if we could automatically collect those? So I brought the idea to Latera, and they were like, what if you built it with us? And I was like, okay, well, I know who I'd want to build it with. And so Brett Balmer, he, helped build Interaction. He was the CTO founder of Foundation. Like, no one understood like databases and complex sets of information like Brett does. And like, I truly believe he is like a magician. So I called him and told him what I wanted to do. And we put together a pitch for Latera. And, as the person that's done M&A, I knew that one of the biggest challenges in bringing in technology that you're acquiring is getting the tech stacks to talk to each other. Since we both worked at Latera and we both understood the Latera tech stack, we said, what if we do this together? And what if we build it together so that we can build it into integrations directly into core systems that Latera already has, with bringing in both our ability to work as like almost like a small company. Let us be a startup. Let us use startup practices. Let's break from traditional, some of the more like bigger company, like, kind of processes. Let us build this. We worked with Theory and Principle to do a lot of the design on the product. We did a lot of things on our own. And then we worked with a lot of the Latera team to like kind of bring it in. So we knew that this way we could move faster because we were kind of a startup and we are very startup minded individuals, and we could work with customers that we knew and trusted us. And then we could bring it over to Latera so that it would be easier for them to bring into the product set. So it was a totally different creative way of working. It was really, really cool. I mean, I've loved it. And so then I've kind of stayed on and helping bring it over, and work with the team on how it looks from a go-to-market perspective and everything. So it's definitely been a really exciting role and different way of doing things.
Yeah, and that platform is Dragon, correct?
Mhm.
Okay, and then you're also working on another Lattice.
Yeah. So when we were presenting them the idea for Dragon, they had been also evaluating what does it look like to be able to take all these databases of information and ask complex questions. And we agreed. We were like, look, if you can start to access all the information that's in your documents, and Foundation has access to the experience, and we can tap into financial systems and things like that. What if we could query across all systems at once to ask really truly complex questions? So if I want to know how many M&A deals did we do in the last 6 months that have an earnout and rollover, and where we have a realization rate of 95%, because I need to price a new deal. And I want to make sure that I'm looking for budget numbers that fit in this, and maybe the deal needs to be in the 50 to $100 million range. So I want to pull all that information together. You can ask Lattice that question, and it'll pull up every deal that you've done, so you can start to see the what the answers are. And so we wanted to give you a kind of do a flip on enterprise on how search works, by being able to like really connect people with the information and data, put together all of the relevancy, and start to pair different databases together. So really want to be able to ask complex questions of databases that don't always talk to each other.
And is this really, are you laying the foundation for firms to create an AFA offering in the transaction space?
If they, I mean, they can start to pull all the information together, and so it should be able to give them. I mean, I think if you talk to people that are in the transaction space, everyone's like, "Oh, we don't do AFAs," and I was like, "Do you do a budget? Like, you give a client calls you and says, 'What is this going to cost?' And you're like, 'About $250,000.' Okay, well, the client heard it costs no more than $250,000. So they've set a budget. So it's not an AFA, because if you go under, they are only getting billed for whatever's under. But in their mind, you are not going over. So that budget is more of a cap. So you better be communicating them with throughout the transaction if you're going to exceed that, and explain why. And sometimes that, you take on more work. They want you to review more diligence. They want the deal got more complicated. The earnout structure became, really, really complex. So there are always reasons why that initial budget number may not end up being the end number. But once you've said it, the client has heard it. And so to some extent, you've given yourself an AFA just with no downside protection. So it's like,
Right.
if you're really efficient and you do it for 200, you're only getting 200. In an AFA, you would have gotten 250.
Right.
It's like, so we're good at saying, we're good at hedging, but so I would love to be in a position where people could set a price that's tied more to the value that they feel like they're driving for the deal, and then benefit from using the technology that's going to make them more efficient and deliver higher value client work. But I think more data allows you to do that more confidently.
Yeah. I mean, this is an issue that we were, prior to InfoDash, we were a company called AcroWire, and we were consultants, and we dealt with clients trying to push us down we call it not to exceed, the not to exceed path.
Mm-hmm.
And it's a losing proposition for the vendor for the reasons that you just stated. It's like, okay, I have to take risk in case, costs do run over budget, but I've got no upside. So I've only got
Right.
downside in that equation. So yeah, that is an issue we've grappled with, and you're exactly right about once you throw a number out there. So how we contend with that is there's only so much like pre-sales engineering that you can do on
Mm-hmm.
a product deal, right? Like you come in, we do a gap analysis, we ask the client all the things, all the right questions, and we get back data, we create assumptions, acceptance criteria, and then the project kicks off. And then we have an engineering phase where there's a lot of validation that happens, and all the time there will be a new stakeholder that pops up and go, oh, here's Joe from marketing. Yeah, Joe wants to do that differently. Like, okay, Joe can have anything he wants, but we have to create a change order to accommodate for that. And, sometimes those are tough conversations, but the reality is you can't put all that risk on the vendor side and just say, like, fixed price requires fixed scope. If scope
Right.
changes,
Yeah.
then price has to change.
Yep.
So yeah, that is, something we've struggled with for many years and come up with a pretty good process to manage it. But like,
Yeah.
what are opportunities I can see in doing what you're doing with this startup inside an existing company? What are there challenges or things that are different? Like I would imagine, yeah, you've got the resources. Is there the same, like when I think of startup, I think of aggressive risk taking, right? Like, you have to pull the reins on that a little bit? Like,
I think you do. I think you
yeah,
do. I think the one difference here is that we were very known quantities. We knew the business. Like Brett and I both. Like, I mean, my company was acquired in 2019. We started this in 2023. Like working with them to do this. And so, both of us have run companies before. Both of us have been in the Latera business. We knew the people we were working for. We knew the products that we were integrating into. And so, like, we were able to really clearly identify scope. But because we'd also been, founders and done this, we actually knew we needed to be really tight on what the scope was that we needed to deliver in order to get them started. And I think that comes from a lot of like trust and communication to say, okay, this is where this can go. Like similar to other companies, when you have a startup, you always should understand where you can go, what is this going to do? What am I building towards? But with an aggressive focus on what am I actually delivering. And so I think because we've done this before and Brett's done it a number of times, like he knew exactly what we were like, we are committing to these things. And I think that helps everyone involved because if you're very clear and we had very detailed, like this is what we're going to do, this is how we're going to do it, like we were able to all agree on it. And it doesn't hurt that like a number of people on every side of the deal are lawyers. Like, so I'm a lawyer, so I know how to deal terms. Brett might as well be a lawyer at this point to some extent. And so we were able to literally mark out like, okay, this is what we're going to do. These are the exact features. This is what it's going to look like. This is how we're going to do it. This is how everything kind of comes together. Because it was just, I think also because we all knew each other, we didn't want there to be any sort of issues. We wanted to say this is what we were delivering and this is how we were going to do it. And so that sort of stuff worked really well. Now, there's like on the different side of it, it's like everyone has their own ideas of what happens with something once it's kind of done and moves to the next stage and how you would handle things or how I would have chosen to do something if I was, a startup CEO versus, kind of just helping. Like, so there's always going to be things that I would say I would do this differently or I would do it slightly differently. And they would be like, okay, but here's why, and here's how it fits into the bigger things they have going on. And so it's like, we all have our own vision of like how certain things go. Fortunately, we've been very aligned on that, but there's always going to be those moments of like, well, I would do this. And they're like, well, we would do this. And it's like, but it was funny. Like, cause like Dragon was actually supposed to be a code name. It was supposed to come out. There was supposed to be a new name at some point. Everyone just started calling it that. And so then all of a sudden it was Dragon. And so it was like, that may have been one where it was like, that was just an idea that I had because I'm a deal attorney. And so it was a deal database. So I called it Dragon as a code name, Project Dragon. And then it ended up turning into something totally different. So, you find your way through it, and it ends up in places that maybe you didn't think it would in the start, but it's been really great.
yeah. I mean, you guys are uniquely positioned. I mean, I'm curious if you think this model will be replicated again, maybe inside Latera and other places. You
Yeah.
guys have a really unique ingredients here and
Yeah.
position. So I don't know how replicatable. What are your thoughts on that?
I would love to see it be replicated. Like I've always had, I have different ideas, like whether they would be ones I would do with Latera again or someone else. Like it is an interesting way to do things because it allows a bigger company to take a risk on doing something, but with a little bit more control. And it's like, look, I've seen I've seen acquisitions work. I've seen acquisitions not go as well. I've seen like promising companies not, meet their full potential because, they had to pivot in what they did. And so it's like, to see something get to be built, to see new things enter the market, and then have an immediate home and the immediate opportunity to grow. It's really cool. So I actually really like it. I would love to do, I'd love to do it again. It's a really interesting way to bring new technology to market, but it's like you kind of need the right ingredients. Like, could we replicate it again? I don't know. Like, could you need people that understand the underlying business that you're building for, the product sets that fill their gaps, and then you have to have the trust of the company that you can build it for them. I think there are people in the market that could put those ingredients together. um, so we'll see. I would love to see it again. It was,
Yeah,
I think it's really cool.
it is really cool. And I the corporate skill set is very, very, very different than the startup founder skill set. Like night
Mhm.
and day different.
Totally.
My wife and I own 5 gyms here in St. Louis, and we're part of a franchise brand. And she runs that business. I run InfoDash, but I kind of helped her get going and got real involved with the brand for
Yeah.
a hot minute. And I saw and started a franchisee association, and we were, our charter was really kind of help franchisees that were struggling. And I saw some people who were very, very successful. One of them was a CEO of a Fortune 500 company in the corporate world who jumped in to entrepreneurship and really, really struggled. In fact, I don't know if he's still involved. And he had the most impressive corporate legal resume that you could imagine. But when you're a founder and an entrepreneur, you've got very limited resources. Typically, I think you guys are an exception here, but someone jumping out there on their own and starting a new business, very limited resources. The risk reward equation is very different. Like when you sign, like in the gyms, for example, you sign a 10-year lease with a personal guarantee, or you go
Yeah.
get an SBA loan and they put a lien on your house. Like that doesn't happen in the corporate world, right? If things don't
Right.
work out, you go find another job. It's not you lose everything. And that creates a different dynamic and lens that you use on decision making. And you have to be willing to push and take risks, or because it's impossible to get upside without taking risk. So
Right.
yeah, you guys are
Well,
unique.
yeah. And it is, it's one of those things, like it's a different position. You're working it different. Like, I mean, I just remember starting Doxley, and I had friends and family that invested, and High Alpha, which was the venture studio I worked with, I respected every person who was in there. So it's a different set of risks. Like you've got a lot of people counting on you, you have employees counting on you, and you're like, oh my gosh, every day I've got to think about how I'm going to take the next step. In this instance, like, we're building something for a company that we care about, that we've spent a lot of time with, that we have a vested interest in making successful. And so it's just like, how what are the things we need to do. And I think that's why sometimes it works. Like, so if you're really passionate about what you're doing, what you're building, and I think you see that, like, people that leave from the corporate side that are like, I've been very successful in my job, I have ideas of how things are broken and I'm going to fix them, they don't always bring the same level of passion to being like a startup founder. And whether that's an entrepreneur or just a true startup, like, it's a lot of work, it's a lot of risk, it's a lot of I have to do a lot of the things myself. And if you are not a CEO that's willing to roll up your sleeves, take out the recycling, take a customer support call. I used to take Doxley support calls at like 2 a.m. Like, if my team was asleep, I was answering the phone, because, and our VP of engineering, we, like, the two of us would be like 3 a.m. talking and making sure a signature page got out. Because when you're in those early days, like, every moment counts. And if if you've come from an area where you've got a huge team underneath you, making that transition to, I own everything, I have to do everything, this risk lands with me, it's a total different mindset. And we we brought the same care and concern that we had for our individual startups to what we were doing with Dragon and Lattice. And so, like, Brett and I would be on late night calls, working on the product, figuring something out, talking through what we needed to do on this. Did we need to pivot the product slightly because of some feedback? Like, we took every bit of it as serious as if we had our own startup that we were building.
And on the flip side is true as well, right? So, people could be very successful on the corporate side and not so on the founder side, but founders that get acquired and have earnouts struggle. How many times have you seen it, right? Like where a founder, a startup gets acquired, founder has an earnout, and it is a disaster because you're now working inside of a big organization with constraints and processes and things. And they're like, what do you mean I can't do that? Well, yeah, because we have a process.
Right. And it is a struggle when you take on every role down to the like support calls, having someone want to change how you do something because you need to scale. It's a hard thing to let go of. And it's a hard thing to let go of in some instances, the creative control. Like I built Doxly. I love Doxly, but we were combining Doxly and Workshare Transact. And, we needed to make decisions. And so ego had to come out of it. Like, I knew from the beginning, most likely, even though I loved the name Doxly, like that was most likely not going to fit in Latera's world of compare, create, and very verb driven things. So Transact made a lot of sense. And they asked me, they're like, are you okay with this, Haley? Do you want us to come up with a new name so it's neither of the two products? And I was like, why? The name Transact fits perfectly. Like, I can let go of my ego in what I built. You want to change some of the design, as long as that's going to drive the value to the customers, fine. Like, you have to, like, there's a lot of ego that goes into building a startup, and that you have to, like, you put so much of your heart and soul in it. Becomes, I joked when I sold Doxly, the code name for the project was Delano. Like, and they were doing, Latera was doing, or HG was doing president's names. And so Delano was for Franklin Delano Roosevelt. My kids' names are Kennedy and Madison. So it was like a perfect, like, it was just perfect. My code name for selling Doxly was Delano. It was like another child. And that's what it feels like. You've built this thing, you put every ounce of your, you've not slept, you've stressed, you've put so much into it. And so you have to give that up. But when you're in a big company, ego has to come out of it. Not everything I built was going to be perfect. Not everything we did, not every choice we made was the right one. And we needed to optimize for what was going to fit into Latera, what was going to fit in bringing the products together. And so you have to be able to take your personal sense of what it is out there and figure out what does working in the bigger, broader good look like. And it is not a transition that every startup founder can do. And that may be the benefit of being a law firm partner and having to take your ego out of a lot of things, and then going into startup and having to learn and be creative, and then going back. Like, it's like I've been in the firm world for a long time, and then I'd been in startup. So I think I was able to go back and understand, like, there is a difference in terms of what we're doing and what we're going to accomplish.
Yeah, I've been an entrepreneur for 32 years. I've been an operator for 22 of those. That 10-year delta, I spent a little bit of time at Microsoft and Bank of America. And man, I learned, that was such a good learning experience for me. And if we ever do eventually get acquired, I understand the corporate world and how different it is, and will be much better prepared than, your typical 20-something startup founder who maybe spent 1 or 2 years practicing at a law firm and jumped out and created a startup. But let's talk a little bit about valuations. This is such an interesting topic, and I follow the space closely, and not even before I created a startup that could potentially be an M&A target one day. It's just, I find it fascinating. And during the ZIRP era, the zero interest rate period, as they call it, valuations got sky high, and there was this growth at all cost mentality. And what that led to was very low go-to-market efficiency, very high customer acquisition cost. And, LTV ratios were, or CAC to LTV ratios were
terrible.
Out of whack. And then the pendulum started to swing back, right? So inflation, tightening, Fed tightening, reducing quantitative easing, raising of interest rates. And then all of a sudden there became this, what I think was a disproportionate focus on profit. And like, yes, profit is good, but when you're building a startup, like our goal at InfoDash is we want cash flow neutral growth, right? So we do not want to position ourselves. We're already profitable. We're 3 years in, and we want to maintain that. But growth is worth significantly more than profit on an exit, right? You could be like, if you've ever modeled out, you probably have, where the rule of 40, where in different scenarios, I had AI do it for me. I'm not sure how accurate it was, but the longest break even period for an acquirer is 40% profit, 0% growth, right? That's the longest path to break even. Surprisingly, I thought it would be skewed much higher in the growth and no profit, but it's actually almost like a bell-shaped curve, and a healthy mix of both is really gets you there quickest. But it's incredible when I'm seeing these valuations. Harvey's a notable example. Their Series B round, I think they were $715 million in about a year ago, and then their Series C with $30 million in revenue, the valuation was $1.5 billion. So that's 50x revenue. And I'm thinking to myself, all right, what has to happen for those investors to have an appropriate level of return? And there's a number of things that are challenging there. One is the TAM, right? On the law firm side, there's only about 500 law firms in the world that have more than 100 attorneys, right? So, and I know that they're going to have plenty of work on the inside counsel side, and I don't know that world well enough to size it, but I know the law firm world really well. And, so I just like threw some assumptions in Claude and said, all right, what would it take to get a break even on that investment? And it was astounding the things that needed to happen if you were just law firm, which is not the case. So take that with a grain of salt. But yeah, so they would need 75% market share. They would need, which would be about 375 of the 500-ish firms. They would need to generate about $800,000 in revenue per customer. Right. So now you got to think about that. Like, okay, maybe that's possible, very doable on the AmLaw 25 space, not on the NLJ 350 side of that spectrum. They'd have to have a compound annual growth rate of about 40% over 7 years. This is just to break even, right? So, and again, this is with a grain of salt because they have a bigger market than but again, venture in funds aren't in the business of breaking even. So multiply this times 10, right? And that's where they need to be in order for this investment to make sense. So like, what is your take? Clio was another one. Clio had a massive round. They're much more established than Harvey, but it was interesting. I think their valuation was $3 billion, doubling its previous 1.6 valuation in 2021. How big is the market? Like, I don't know. What is your take on where we're at? Because I feel like we went from the ZERP era, growth at all costs, driver of valuation, and it's like the pendulum started to swing in 2022, and then Chat GPT came out and all this AI hype, and it's like the torch got handed to the AI startups, and now they're going crazy with valuations.
Yeah. Well, okay, look, we saw this once before with contract lifecycle management, where you started to see the 60x multiples on valuation in the, kind of the early ironclad days. And then you saw like a huge hype cycle around that category. This category as a whole has a huge potential. No one has market share. If you could get total market share, the market is big and the value is there. And then what you've seen is, that you've seen companies in that space go under or, have to combine, and the valuation, whether people are going to end up with the valuations they want on that or the multiples that they want to, it's still left to be seen, because there's still a huge amount of growth opportunity and things like that. But you started to see these huge valuations. Then everything started to temper down, and everyone was like, okay, wait, this is not the way we are able to really exit. And so you started to see more sensible valuations, particularly in the legal space. And then Gen AI has changed it. It's a new category with new TAM, and people just are not sure all of the different ways that it could touch and all the different ways it will transform legal work. And so now you have non-traditional investors who are not necessarily used to a couple of things: law firm sales cycles, size of law firm contracts, and all the security aspects that you need to go through in order for a new technology to enter a space. So you've got a lot of investors that are excited about the possibility. They see how the technology, they can understand how legal would be one of the larger impact spaces with a bigger impact, a disproportionate impact on how because since it ties to language, ties to reading, ties to documents. So some of those areas where Gen AI seems to have a potential bigger impact tie in. So non-traditional investors are entering the market that don't necessarily understand the full scope of the space. And so there is a lot of valuations that are higher because they're seeing a lot of opportunity. The question is what is the true TAM? Because you're right, law firm market true TAM is different than if you're looking at a horizontal venture capital backed solution where you can sell across markets and the market and TAM is a lot larger. Now, I would assume that for a Harvey, and I would keep them very separate from a Clio because of just the different ways that they look. I would assume if you're looking at a Harvey that they are very much looking at a TAM that is outside of legal, probably professional services, accounting, financial services, those areas. Probably a mix of things in the diligence and the doing the actual diligence work that would actually be traditionally legal work. So I would imagine that they're going after more areas, and that is what's underlying their TAM and what's underlying the investor expectations. But this means that, and look, they've brought in a great team and they've got a lot of work, but they have to deliver on a lot of different fronts. They have to deliver on a law firm market product. They have to deliver on products that are outside of the law firm market. They have to deliver on products that may actually start to look like legal services at some point. That is, all those things have to be true. So there's going to be a lot of expectations on what they can deliver for them to be successful. And you'll see that with ones that are kind of broader scope Gen AI. So I think it'll be interesting to see how it works. Now, that valuation has led to a lot of other more like kind of focused Gen AI products also getting bigger valuations that they are going to have to live up to as well. And so I get the feeling that we are going to see a lot of down rounds. A lot of people wanted to enter the market. They couldn't get in the Harvey investment. They couldn't get in the Alea investment rounds. And so they wanted to they started to invest in other players that started to kind of have those like kind of hallmarks of, we're going to enter and disrupt this space, and we're going to do it with this technology. And you're seeing valuation rounds that are higher than what we would expect based on the TAM that's available. And so when non-traditional investors don't necessarily have a full sense of the TAM and the sales cycles, I think you're going to see money come in at higher valuations, and then the sales velocity is not going to match the amount of money that was put in, because law firms still have longer sales cycles. Also, law firms saw 70 new Gen AI companies enter the market and have no capacity to evaluate them in the time or speed that the investors of those companies would expect. There's too much in the market to truly diligence, pilot, security assess. So law firms are under extreme amounts of pressure to actually even evaluate technology. And there's so many new startups, and no one knows if those startups are going to make it a year, or if they are vaporware, or are they just a pretty front end to GPT? Are they thin wrappers that don't do much or add much value outside of the core cost of the model. So law firms can't evaluate things at the speed at which it's going to take to move the sales cycles forward for these companies that just got high valuations. They're burning cash because they hired a lot of expensive engineers and data scientists. So it's going to be, I think you're going to see a set of down rounds on that area. I think the Clio is different. I think Clio is an established company. They have a massive customer base. They moved into the worlds of payments when they kind of cut ties with the FinaPay and LawPay, and they have an entire new set of products that they can sell into a very established, loyal, existing customer base. So I would imagine the Clio valuation is set differently because it is based on a lot of companies like a Harvey, it's based on the promise of what you can build in entering markets. Clio has an extremely established customer base that is very loyal, that has long, like lifetime value. They have a longer lifetime value. So now they have to make the promise that they can actually sell into all of these different. They have to prove that they can sell new products
Cross
into the
sell.
existing customer base. Yeah.
Yeah. So, and yeah, I completely agree with you. They are very different scenarios. I mean,
Mm-hmm.
Clio's been around.
Yeah.
I remember my early days in legal. When we didn't know where our target customers
Mm-hmm.
lived, we went to a few ABA tech shows. I mean, I'm talking
Yep.
like 2008,
Oh yeah.
and I remember them. They've been around.
Oh, they've been around.
Um, but your observation on the number of solutions in the market and the way law firms are buying, I've had similar observations, and there is two forces on different sides of the supply demand equation. On the supply side, you have this irrational exuberance, and there's no way of getting around that it is. AI is going to be transformative. There's no doubt about that. But, usually the first company to be successful in a category isn't the long-term winner. I mean,
Right.
ask BlackBerry, ask Netscape, right? They
Yeah.
paved the way for future generations of firms that get it right. But we have irrational exuberance on the supply side, inflating the capital markets, and then on the demand side, you have law firms that have these FOMO induced buying patterns where discipline and um, efficiency really are taking a back seat to, because they're getting it, at the highest levels in law firm leadership, the XCOM level. They're like, hey, we got to get a handle on this. That Goldman report scared the hell out of everybody
Yep.
with 44% of legal tasks being automated. I think that's a gross overestimate, by the
Yeah.
way. And I think everybody does now.
Right.
Where that number lands long term, who knows? But it's not 44% short term.
Right.
And I don't think it's 44% midterm. But yes, there will be a transformation in the space. But the odds that Google Ventures and OpenAI, Google Ventures led the Series C round at Harvey, right? And
Mm-hmm.
they come from outside, and they don't have all of the perspective that you described. Alex Sue wrote a really good article about how hard it is to disrupt legal, and I mean, it is so difficult. And there these models, these economic models and law firms are so well entrenched. That's why the billable hour won't die.
Yeah.
Your comments about the AFA is spot on. It's like telling a room full of millionaires that they're doing it wrong is a tough proposition. So,
Well, also the
yeah,
clients, like, here's the thing, like you can have like a budget or something like that with a client, and they still want to know what the hours reports are. Like clients still like the hours. They like to know what people did. They like to know what work they did on stuff. So it's not just like, it's not completely that, law firms haven't wanted to move. Clients aren't necessarily prepared to completely abandon that too. They're not excited if they get a one-line bill that just tells them the number at the end. They want to know how it broke down and did it meet
they
their
want the
outside
best
counsel
of both
guidelines. Like,
worlds.
yeah. So we've got a bunch of people like that. I do think there may be a move that Gen AI puts us more towards figuring out what value pricing actually looks like. But I still think I agree with you. We're a ways off in figuring out how this is all going to change things. It will change things. I think you've seen faster change now than you have before. Like when AI came out in the beginning with machine learning, like it's been a longer road. I think this has captured people's attention, and interest. And you will see movement, but yeah, how fast and how transformative off the bat, not as sure.
Yeah, it is a bit of a guessing game at this point. Well, this has been so fun. There was a whole section of the things we were going to talk about that we didn't get to. I would love to have you back on at some point and explore this more. So, are you going to be at TLTF in a couple weeks?
I will be at TLTF. I love going there. Zach's group they put on an amazing conference.
They do. Yeah. Last year was my first year, but we're back again this year. We're actually going to be pitching. So
can't wait.
Yeah. We're a new TLTF portfolio company.
Congratulations there.
Yeah. Yeah. We are in a unique position where our growth is, we had a lot of wind at our back that was really a result of, we have an amazing product, but we've been fortunate with timing. Law firms are really just moving now in the last 2-3 years in earnest to the cloud, big law, right?
Oh, yeah.
So M365, first step is Exchange, you get messaging up there, and now they're starting to get to those ancillary workloads like SharePoint and moving them up. And that's where our product lives. So firms are having to rethink whatever they had on-prem, like it's not going to run in the cloud. It's a different development model. You can move your content, but your customizations have to be completely reimagined. So that's put a lot of wind at our back. We integrate very seamlessly with Teams and Microsoft Teams, which has had an explosion post-COVID.
Yeah, hugely important.
Yeah, I know you guys have CAM and other products that have also, I guess, benefited from those tailwinds.
Yep. It's been a big move, and it's like and no one's done, and there's so much that needs to be done to help people make the move there and make the most of their data and their experience and expertise.
Yeah. Well, this has been such a fun conversation. I really appreciate you taking the time, and I look forward to seeing you in a couple weeks.
All right, sounds great.
All right. Thank you.
All right. Bye.
Thanks for listening to Legal Innovation Spotlight. If you found value in this chat, hit the subscribe button to be notified when we release new episodes. We'd also really appreciate it if you could take a moment to rate us and leave us a review wherever you're listening right now. Your feedback helps us provide you with top-notch content. Want to dive deeper into the world of legal innovation? Connect with us online at getinfo-.com, where you'll find additional resources and articles. You can also follow us on social media at getinfo- to stay updated on the latest news and insights in the field of legal tech and knowledge management. Once again, thank you for joining us today on Legal Innovation Spotlight, a fireside chat series hosted by Info-.